Good day, traders. The 4-step method to high performance trading is a free course download for increasing your competence and your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started.
Trader Stacey Burke from Stacey Burke Trading. Today we're going to be talking about mastering the 3-day setups. We're going to continue our discussion on being specific about trading setups themselves versus trying to just trade a market because it's up high or down low and catching moves and counter trending in these sorts of situations where 90-10 opportunities are day 3, typically a day 3 parabolic either trend trade or reversal opportunity. And these are trade specific trading setups that are driven by other time frame traders and driven by institutional traders. Some traders have asked me if it's supply and demand. We can talk about that today. We're going to talk specifically about timings and the levels and why those levels are so critical to me. These are my best trading candidates. I've had a lot of queries and questions about stuff. Again, I'm going to emphasize stay out of the box unless you are already in the move specific to the timing and the levels. The inside stuff is fugazi. That's what the market, they set that up for you to be distracted. There are only 3 levels that they trade from in my book. And we'll go over that today to emphasize that. There are 3 types of opportunity templates that I look for. Now, some traders have complained that I haven't been clear. It's too complicated. I'm really kind of uncertain on how much clearer and simpler I can make it. I mean, believe me, I'm a very simple person. I'm not that smart. I keep this as simple as possible. Monday, Tuesday, Wednesday is day 1, day 2, day 3. We're going to review each template. We're going to look at specific examples of that and how these templates can overlap within one instrument and meld from one to the next, giving traders consistent opportunities day after day for best trade candidates if you understand the principles that are driving these movements and these templates. So we have the Monday, Tuesday, Wednesday, day 1, day 2, day 3. Monday is the opening range. Wednesday is the midpoint range. Wednesday resets and becomes a new day 1 heading into a Wednesday, Thursday, Friday, day 1, day 2, day 3 template. That is one type of opportunity. So Wednesday and Friday are day 3s. Now we can have 3-day setups, which gives us a day 3 on any combination of days. And we'll look at some specific examples again this week. We went over this last week. We saw that on the euro on a Monday. We saw gold as a day 3 on Tuesday, and also a Wednesday day 3, 2 days in a row for the same type of pump and dump opportunities, New York Open. And we can have 3 days of breakout traders in the markets, which can reset into a new week, because Friday's the closing range, and we saw that on the indexes today for session trades, which gave traders Russell, DJ30, easy money. The other 2, maybe not as easy and clean, but still simple reversals on day 3 from the high of the week. So my question for each and every one of you is always, are you hunting an actual best trading setup, a 90-10 opportunity, or are you trying to scalp off of a high and a low or catch a move? These markets are well engineered and have a specific purpose behind the templates that they set up. And if you can't see that on the instrument that you're trading, why would you want to trade that? So several traders had some parabolic opportunities today on different instruments. And I had other traders who were trying to counter trend day 3 moves outside of the range in markets that are out of balance after the timing window. Which again begs the question, are you actually trading a best trade setup or trying to just trade an instrument and get lucky? That is 50-50. These are the 90-10 day 3 opportunities are what you can build your trading business on. They're what you can grow a small account fast. Day 3 parabolics will often provide range expansion opportunities, measured moves. And we'll talk again about these boxes today. The boxes are specific. Or is it a session trade from daily level to daily level, high of session to low of day, high of week to low of day, whatever that may be on the day itself? Is it front side or back side? So again, coming back to Monday to Wednesday. Wednesday's the midpoint range of the week, and then we head into Wednesday to Friday. And in a 3-day setup, Friday is our closing range of the week and can reset as a day one heading into our new week, Friday, Monday, Tuesday, as we saw on gold this week. So we'll take a look at each specific template. And I have to reiterate, it is simple. Step back and understand when the levels are broken. There are only 3 levels that matter. All the other stuff inside, you can argue till the cows come home. Until that timing window kicks in, it's fugazi. It's fairy dust. It's what they want you to see, which is why by the end of the session, especially on a day 3, all that information is cleared out on both sides. Understand that. Levels, levels, levels. Template 1 is a Monday, Tuesday, Wednesday, day 1, day 2, day 3 template. As I always refer to Wednesday, free cash Wednesdays, because we can get a peak formation, and a parabolic move, whether that's a trend trade or a reversal trade. We get a box. That can be a day 0 setup. We can get different variations of that. We can have markets that will dump and pump over that 3-day template. We can see a pump and dump day 1, day 2, day 3. For a session trade, we will look at some specific examples of that as well. And we can see that reset, as we saw last week on pound yen. Wednesday, our high of the week, day 1. Day 2 on Thursday. Non-farm payrolls and a reset on Free Cash Friday for a parabolic range expansion on non-farm payrolls, which continued for over 100 pips on Free Cash Friday, a dump and pump template over the 3 days. So these are very specific types of opportunities that will show up every single week. This type of template. We may have a very subtle front side template, Friday, Monday, Tuesday, Wednesday, for a parabolic move heading into the end of the week. And as I mentioned on the weekend, when you understand that the U.S. on Friday and on Wednesday is the 3rd session on day 3, that potentially will close out that day, perhaps on a range expansion or for a session trade at the extreme. Session 3 on day 3. The second type of template that I look for is the 3-day setup, and that is any combination of 3 days. We can have the 3-day setup as we just looked at, Monday to Wednesday, Wednesday to Friday, which is a Monday to Friday template, pump and dump, dump and pump, or we can have any combination. We can have a Friday, Monday, Tuesday, for example. Friday's our closing range. That can be a breakout trade that continues higher on a Monday, day 1, day 2, for a session reversal trade on day 3. Or we could get Friday breaks out and reverses, Monday's day 2, and Tuesday's day 3, as we saw in gold this week. We can have a Tuesday peak formation, Wednesday inside day or continuation day, day 2, and that would show a peak formation on one side and a broken level on the Wednesday for a day 3 opportunity on a Thursday, again for either a trend trade or a reversal trade. Same combination can occur on a Thursday, Friday, Monday. We can get a Thursday peak formation, Friday inside day, or a Friday breaks the other side of a daily level for a Monday trade, whether that's a trend trade or a reversal trade. And as a trader said, well, that's great. You didn't tell us, so that doesn't tell us anything. What on day 3? Anybody can say that. Well, here's what happens on day 3. We either have a pump and dump or a dump and pump daily template, a well-engineered daily template in the session that you're trading to identify the day 3 opportunity on that day. It's not guesswork. It's very specific. And then we'll talk about levels and timings in a moment. But right now, that's template 2. That can be any combination of 3 days, which is why we can hunt out a best trading candidate over a basket of instruments on every day of the week. We may not get a day 3 every single day. We could have a day 2 that's a trend continuation day. It may only be a session scalp. It may be 3 levels of rise for a dump. High of day, high of session to low of day on day 2. It may be 50 pips of easy free cash. but we want to be able to understand where we're at on the instrument that we're trading, if it is indeed a best trade candidate on the day, or if we're just trading 50-50 garbage and hoping to get lucky. Now, the third type of opportunity that I look for are 3 days of breakout traders in the market. So typically we will look for day 1, day 2, day 3, normal template, but we could be in a 3-day setup, a Monday to Wednesday template, but the market continues to go higher. And when we take a closer look, we can see there's only 2 days of breakout traders in the market. There's a third day of breakout traders. And we may not see the market reverse until the next day, which is why we'll sometimes see a Tuesday, Wednesday, Thursday template. Or we can see a Monday, Tuesday, Wednesday template, a Thursday reversal, either session trade or a first red day, and perhaps a Friday reversal day in the U.S. session. So these are the important parts to study the levels, which we'll talk about next. But 3 days of breakout traders in the markets is a signal that the market can reverse on that third day. So typically we'll look at an example of that as well. Aussie dollar right off the top of my head, Monday, Tuesday, Wednesday, reversed in Asia and continued all the way down through London and the U.S. window to the low of the week. Day 1, day 2, day 3. And 3 days of breakout traders in the markets. We can also see 3 days of breakout traders in the markets for trend continuations, as we saw on the indexes, which can occur again week 1, week 2, week 3. Important to understand the levels, that the instrument that you're trading, but it's the setup that you're identifying on the day. Understand the bigger picture so that you're not getting caught just trying to jump into something because it's 3 days of breakout traders in the markets, or it's a Wednesday, or it's a day 3 and it should reverse. As I repeat over and over again, retail loves to counter trend. So the question I always want to ask people, if you're counter trending at the high or the low, what time is it? Is that an actual setup? Do you have a setup at the timing window? Is it a reversal trade, or are you just trying to sell it because it's up high or buy it because it's down low? Some traders tried to buy gold today. It continued lower. Day 3, we're in a market that's out of balance. So getting pips versus a scalable, sizable, reproducible opportunity. 1 push, 2 push, 3 push. Day 1, day 2, day 3. Parabolic continuation trade. Measured move, range expansion, sizable. Path of least resistance. Or are we in a market that's already broken out and we're in a short squeeze or a long squeeze reversal trading setup? Very specific to understand. Is it a setup, or are we just trying to catch a move? Now, I've gone over this in many previous videos, but we'll do this again. We'll review this again. If you're trading Asia, 8 to 11 p.m. So, for example, some traders in the Southern Hemisphere mainly trade Asia. And as I mentioned, your basket should reflect instruments that have the potential to move in Asia. Aussie dollar, New Zealand dollar, Japanese yen, and their cross rate pairs, Euro yen, Pound Aussie, Euro Aussie, and understand day 1, day 2, day 3. You may want to be trading indexes that reflect those session times. We have different Asian markets that open within that window: Shanghai, Tokyo, Singapore, Sydney. So there is a bit of crossover, but typically that middle hour will be when we'll see a nice parabolic opportunity on a day 3, if indeed it presents. Sometimes we'll see them on a day 2. Day 1, day 2 continues in the direction of the trend for a parabolic move. We can see a first red day trade right off the bat early in Asia that continues in through the close of the U.S. session. Same applies for London. The 4 a.m. window is when London equity markets open for that middle hour. Pound, Euro, Swiss franc. We can see any of the major pairs move in that London session for a best trade candidate on any day of the week. And on a day 3, if it's blowing off in the direction of the trend, we can see yen crosses do that. We saw a couple of spectacular trades in the last few weeks in the London session. In New York, where 90% of my trading occurs, and specifically 9:30 New York Open, we can see currency pairs move in that first hour. We saw the Euro move first hour, Euro yen move at the New York Open today. We can see the indexes explode at 9:30. Oil and gold continue or lock in and move after the New York equity market opens. So often we'll see that no major red news on the calendar, we'll see the market's first hour lock in a high or a low, second hour coil for an explosive either continuation or reversal trade on a day 3. Day 2, trend continuation, unless we have a failed breakout starting a new 3-day template. So, question from a lot of traders: I can only trade certain times. I can't trade the equity market sessions. What about the gap times? Now, I'll specifically say this, and I would like you to go study this and understand when there's a day 3, especially if there's a lot of major red news on a calendar. We see this typically maybe on a non-farm payrolls week, Fed week. We can see some absolutely fantastic trades come at the ends of the 3-hour windows, Asia and London, heading before we get into the New York session. And that typically will be 1 hour, 2 hour, 3-hour move, and a move that either occurs at the end of that 3-hour window or in that middle hour of the gap time. That puts in an extreme peak formation low, peak formation high, or they've already worked into the high of the week, and we'll see 50 pip collapse or a 50 pip explosion often heading into the US window, which forces traders to second guess how they will trade it in the US window, or they'll drag it further into the open of the New York session, trapping traders at an extreme. So often on a day 3, we can see a fantastic gap time opportunity after the 3-hour window. They hold the volume up higher, they hold it down low. And again, understand you need to identify the best candidate on the day, not just trade any instrument. It's finding the best setup on the day. Trading setups, not just focusing on one pair because that's your favorite. I could care less what instrument I trade. I'm looking for the setup. And then the next thing I just want to point out with this is I use hourly charts. Hourly charts from my bigger picture template. And so I really want to emphasize the importance of understanding when an hour is ending and you're at a level, or when a new hour is beginning and you're at a level, and you have your smaller time frame confirming behavior of price, whether that's a triple top, an M structure. An M structure on a 5-minute chart will be a triple top on a 1 minute. A 1, 2, 3 engulfment on a 5-minute will often be a pin hammer on a 15-minute chart. A 1, 2, 3 and a reversal engulfment on a 15-minute chart will often be a pin hammer on a 1-hour chart at the high or the low, or into a level before it continues with a trend trade. The hourly rotation is key. Everything is timed and measured. The bigger picture templates in these 3 major sessions, and on a day 3, session 3, is when we can see a large parabolic trend trade or reversal trade happen, especially in the New York window, especially on a Free Cash Friday. Now, these are the levels that I trade from. Now, I just want to repeat that this is the trade setups that I use from my playbook. Now, a question that I have gotten is, why didn't I include closing price in the playbook itself? And one of the reasons is, at the time, as I mentioned, I really wasn't paying attention to that as much as I was the larger templates. And as I've repeated, there are only 2 types of trades. There are pump and dumps, and there are dump and pumps. And these will often coincide with these price levels. The longer as time has gone on, the more importance I've put on that. And I want to just state this emphatically. I only trade from these levels when the timing window kicks in, if there is a best trade candidate. I'm not just marking off levels and zigzags and drawing consolidations and taking trades and doing all these sorts of things. These are very specific setups, and they will either be trend trades, so we can have a market that comes down and closes and trades, and when the timing window kicks in, pumps up, and 9:30 New York kicks in for a continuation trade from the level. And then I talked about range expansions. Range expansions are these measured movements that on a day 3, we can often have a market that will continue for a measured movement on a day 3 for a range expansion opportunity. Now, we can also get trades that will just be a session opportunity. So as an example, we could look at the NASDAQ, or the DJ30 was a better trade. We had it pumped up, it reversed, and gave a session trade from high of day, above closing price, which was 50% within the upper box itself, to the low of day. Now, that may close as a first red day. I don't know. We'll take a look in a moment. That's a session trade as opposed to a market that breaks out and continues for a measured movement of that range on a day 3. And we'll look at some specific examples of that. An ideal parabolic day 3 trade, especially Free Cash Wednesday, Free Cash Friday, will often offer us a measured move, asymmetrical risk reward profit target of that trading range on the day. So I will repeat. These are the only levels that I trade from, and I'm going to explain why. Now, I want to also just state I don't care whether people agree with that or disagree. It's irrelevant to me because I'm trading specific setups. But when we come to a new day, our only reference point is that yesterday has a closing price. And today, when we come to the screen, gold might be up. Oh, gold's up 2.5% from last night's close. They're using yesterday's closing price as a reference point. An excellent question today from a trader. What do I place any relevance on the opening price of New York? Zero relevance at all. It's only about where it is in relation to one of these levels and what type of setup do I have, and is that market set up at a level, or is it in the abyss, in the middle, in Fugazi land? So all this other stuff that I see before the day even starts is what they want you to see. Oh, it's done this, it's done that, it's done this, it's done nothing until New York opens. That's how I feel. It's done nothing. Everything else is an illusion until I get to a level. Now, if they pump it up from Fugazi land into the low of the day, and they've gone down and put a lower low in place, that market has already broken out. It's already broken out. It is now active on my list. It has broken out of a level. If it's inside, and people are calling all these things breaks in structure and all these things, all it is in the middle of the high and the low of the day. So when 9:30 happens, I need it to be at a level. Now, we saw the euro give us a double bottom structure on day 3 for a reversal trade from the low of the day to the high of the day. We saw gold pump up inside, break down from the closing price, make lower lows, and coil sideways at the New York Open for a measured move outside of the low of the day on day 3. A range expansion opportunity. So the thing is, tomorrow when I come to the screen, there will be a low of the day, a high of the day, and a closing price level. Now, another excellent question from a trader was that we didn't necessarily have matching closing prices. And people have talked about opening price. The only time I'll concern myself with opening price if there's a gap is on a Monday. The other times mean nothing to me. Monday to Friday, they roll over. There might be the odd gap, but it's closing price. They don't put the reference in the paper or for people in reference to today's price is up 2.5% from the open. It's up 2.5% from last night's close. And the closing time is 5 p.m. New York. People have asked me about midnight, all these things. I know nothing about that. I don't even know where that came from. My charts close at 5 o'clock. And funny enough, the green line that's on my chart every day that closes at 5 o'clock seems to be really relevant to when New York opens. There are two types of trades I'll look for on a day 3. We can get a day 1, a day 2, and on day 3, we can get a market that comes up to the high before dumping down and then continuing for a dump and pump on the day, a dump and pump template on day 3. We could have a market that breaks down and pumps up into closing price and breaks down on day 3. Day 1, day 2, day 3. Now this again comes back to which session, the timings, and the behavior of price. Is there any major red news on the calendar? As I repeatedly say to traders, sit on your hands and wait because the opportunities will be there. Trend trades and reversal trades. So we have the opportunity on the larger template for a pump, and dump, maybe Monday, Tuesday, Wednesday, Thursday, Friday, or Monday to Friday. It can be the opposite. It can be a dump down inside day and a reversal on Friday for the dump and pump template. within that itself on the day 3, is it a pump and dump setup in the session that you are trading? Or is it a dump and pump template in the session that you are trading? So we have 2 types of trades, but what is the setup? So coming back to an example, today we have a market that's broken down on gold. It's down low on a day 3 on a range expansion, and traders are looking to counter trend it. So my question always is what setup is that? What setup is that? Are you hoping to catch a move? The easy money was on the market pumping up and breaking out and then looking for the range expansion opportunity. The reason why I emphasize that is because when you counter trend a range expansion, you will at some point blow out your trading account if you're trading any size. Now, why would you want to catch a falling knife when you can easily trade the parabolic move on the range expansion opportunity? Trend trades and reversal trades. We can see markets that go out of balance. We've seen this several times on gold. We can be outside of a range on a day 3 when we come to our US session, or in an index, up high, and the market will start to free fall from a high of the week, and traders want to counter trend it when we're in an all-in high of week, low of week opportunity. It's a DNC, do not counter trend opportunity. Or we see a market that's outside, and gold has done this several times. Outside, and we can see a market that's working into a low. We might get major red news, and New York opens and it explodes and goes back to the high of the week or the high of the midpoint range of the week on a Wednesday for a parabolic range expansion from the low of the week. And traders will say, well, yeah, but how did you get that? Because it only does one of 2 things. It's either going to reverse or be a trend trade. And what type of setup is it on the day? What type of template are we in? Day 1, day 2, day 3. Wednesday's the midpoint range of the week, heading into the closing range of the week. Day 1, day 2, day 3. Is it a dump and pump daily template on the day 3 or a pump and dump template? It can be a dump and pump trend trade on day 3 up high. It can be a dump and pump, as we saw in the euro yen today, a beautiful 50 pip free cash opportunity on day 3 for a parabolic trade setup. These parabolic moves, just to reinforce this, parabolic move, when these are going and they're all in, these are driven by other time frame traders. This is a scalable trade that's over fast with size. These will explode your trading account. The difference between traders trying to counter trend moves up high in a market that's still front side. So we can still have this market or very minimal risk reward opportunity trying to counter trend a market on the front side of the move. So critical to understand that. I get asked this question a lot. What am I thinking? What's my thought process when I'm about to take a trade or when I'm in a trade? And I'm going to repeat this. There is no thought process anymore. It's either a best trade candidate or it's nothing. And I've talked about signal days, first red day, first green day. And one of the things that traders need to understand about those is that several traders want to try and trade it thinking it's going to be a first red day or thinking it's going to be a first red day, and they want to be in early. Or they trade it the next day, and it may be a setting up for the day after. We may have a Wednesday first green day, a Thursday day 2 that doesn't go parabolic, and they kind of forget about it because it didn't play out, it didn't work, and they missed the first green day parabolic move on Free Cash Friday. So remember, these are signal days, and we'll look at some examples of that, and we'll look at examples of when we get a following day trade that can be on a Thursday sometimes for a huge parabolic move. Inside days, powerful signal days. And I want to also emphasize that those can be important reversal signal days. They don't have to be false breaks all the time, and they're not going to be a trend trade. It could be an inside day at the high or low of a week. We can see explosive moves, and that would be a day 3. A day 3. Inside day means the day before is day 1. And the moment that the next day a daily level is broken, it signifies the previous day as a day 1, the inside day is a day 2, and we can get a parabolic move. That's a 3-day setup. Now, Traders are going to, I know there's going to be several traders. I make it so confusing, but that's the nature of the game. If you want to get really good at it, you've got to start to understand the power of when opportunity presents, of when a parabolic move is presenting in the session that you're trading. And then if not, stepping back, sitting on your hands and waiting, because there'll be one on Wednesday and Friday. If you hunt out over a basket of instruments, again, a basket, 6, 8, 10 currencies, 3 indexes, gold, oil, there's going to be 2 or 3 sizable day 3 opportunities within that week. And 2 of those by themselves, if you're patient and you're diligent and you learn to size into those, even with small size, you'll double your account every few weeks minimum. Easily, if you get skilled at this and you're prepared to just sit, not try to trade every single movement. Understand the power of time rotation, hourly charts, end of an hour, new hour, levels. I have to emphasize this about the levels. Don't get caught into marking all this garbage inside. It means nothing. The timings, the levels, the behavior of price in the session window. Everything else is honestly, I will emphasize this till the cows come home. Wherever you're learning that from, quit wasting your time. Keep it simple. Levels, timings, behavior of price. Get away from the garbage. It will confuse you. You'll get chopped up on poor quality, wrong days, no setup, zero setup. Step back. When you step back and you understand the power of the time rotation, the hourly rotations at those levels and the measured movement opportunities, you will be participating in some very large, sizable trades. Focus on those. Not trying to trade movement on any instrument every single day. It's my favorite one. I try to trade it. It's really good to me. What does that mean? You're missing out on 5-star candidates on the other 4 days, perhaps, just by focusing on one instrument, trying to read price every day. You get a few good trades, you get chopped up. That's what damages your psychology. I want to trade the same powerful setups every week. Day 3, day 3, day 3. Is this a short squeeze? Is this a trend trade? If it's a trend trade, is it a measured move? What time is it? Is it a pump and dump, a dump and pump? It's that simple. No signal days. Okay, how many days of breakout traders in the market? 3 days. Is there any sign of a reversal? No. Well, then I'm not counter trending it. Why? I'll sit on my hands and wait because it might come on Friday. If I get in today trying to counter trend and I'm fighting gravity, or I'm fighting the trend, why not wait until they lock it in for me for a parabolic move? It might be Monday. It might be a Thursday, Friday, Monday trade. So you have to step back, quit focusing on just one instrument. Don't get fixated on trying to read all the zigzags and the fugazi. Step back, understand where the power is, where the money's made, the easy money. The easy money. That's what I'm looking for. We're looking at the DJ30. We'll look at 4 or 5 different examples this week. You can go and do your homework in the interest of time. I really want to emphasize everything we've talked about. You can take all that information and bring it forward. But Friday's the closing range of the week. So coming back to talking about levels, we broke out on Friday. Okay, I'm going to restart the day count. It's a new week. It's a new week. Monday's day 1, right? So you've heard me repeat that. But we're now also in potentially a Friday, Monday, Tuesday trade if an opportunity presents. Monday was an inside day and also a first red day. So again, a great example of where traders message me and say, but it was a first red day, it was a first red day. And it's a Monday and it's an inside day. We have a market in breakout. And I really want to say that when you see this on a Monday, you already have to be suspicious that that's the beginning of a trap. Okay, so we're trading the New York session. I only trade the indexes in the New York session. New York hour opens and closes right here at closing price level. Dump, inside day triggered, closes. That hour closes at the closing price level on Tuesday for an explosive continuation trade back to the high of the week. Friday's the closing range of the week. Inside day dumps down into the low of the day on day 2 to continue the trend. Now, this is where traders get confused. Monday is the beginning of a new Monday, Tuesday, Wednesday, 3-day template. Friday's the closing range of the week. That's our high of the week. They go higher on day 2. Our Tuesday, day 1, day 2, day 3 pumps up into the high of the day right at the New York open. So again, the timings, levels, behavior of price. I talk about the Fugazi. Closing price level projects across. These are fixed levels. These are real levels because that's what the market uses as their reference point. The DJ30 is up 2.5% on last night's close. That's at the open of today. That's what they're going to tell traders. Their traders are going to go in there going, it's going up, it's going up. This bullish candle, zoom in here, on Wednesday, this bullish candle is the New York Open, that hour. So I want to repeat, when an hour ends and a new one's beginning, they take it to the high of the week on day 3, we have potentially a reversal opportunity. Now this box from closing price or from low of day to high of day or high of week is 100 pips. That's a 100 pip box. How does price behave when it gets to the level? Now let's take a look. Now when I look at, so a lot of traders have messaged me, the 1 minute chart's so complicated and this and that. Remember what I said. I will only be looking at the 1 minute chart when I get here, outside, at that level. Why do I care about all this stuff, marking off levels and zigzags? What time is it? What level am I at? What is my bigger template thesis? And how is price behaving? Now, some traders may have taken this long from the high of day, from the high of the day, 15 minutes into the session. That market closed at 275 and proceeded to go up to 312, so roughly 25 to 30 pips. When this market is outside, this is when I'm looking at it. So I've talked about New York Open taking traders into the extreme. No major red news after the New York Open. There was 9:15. Chairman Powell spoke. This pin hammer into the high. So we have a high bull engulfment. The high bull engulfment in the playbook. Pin hammer to the high, beginning of a new hour. Beginning of a new hour. Now, just in simple terms, if I was to look at this closing price to high of week as of my box, that potentially is a measured move range expansion opportunity if this market's going to reverse. Now we have, we're outside the high of the week. We have our pin hammer, our new hour starting. It breaks down into the low of the open of the New York session before coiling sideways and breaking down 2 full expansions of the range back down. If we just go out to our longer time frame, we get rid of that. We'll go to a 15-minute chart, and that takes out the low of the day. So again, we're getting filled above the box. That is over 100 pip profit target. And if we go back to our 1 minute chart, this is a 15 pip candle. So I repeat, I'm only looking at the 1 minute chart once I'm outside of the range. The exception to that is if I am inside a parabolic coil in the middle of a move, in an existing move from one level that's already been taken out or traded through in a previous session, trading back towards another level. So timings, levels, behavior of price. If we just zoom back out to our 15-minute chart, we can see on our longer time frame, we get our engulfment on our 15-minute chart. So the same process applies. We're just looking to finesse a better entry. This is an example of a day 3 reversal trade, parabolic reversal trade, high of the week to low of the day. Levels, timings, behavior of price. Now, this is the Euro Yen, which was an excellent opportunity today, and then an example of a day 3 parabolic trend trade. We had our closing range of the week. We had first green day on Thursday was our first green day, but Friday was the closing range of the week off the first green day trade. Again, you'll notice again, dump, consolidation, first green day, and then the reversal, dump and pump. So I wanted traders to go and study first green day, first red day, because I'll repeat this. A lot of traders are constantly calling every down close day a first red day and every up close day against a down market a first green day. And you need to have a specific template to match up with that. Notice this was also on a Friday. So we had Monday's opening range broke out. So we have a continuation, day 1, day 2 from Friday. And this is an example of Friday's our closing range. We broke a level. So this is where an example of a 3-day setup comes in. We have a breakout traders in the market. Day 1, day 2 on Monday. Day 2 on Monday. That means Tuesday's a day 3, and we'll look at that. We'll take a look at that in a moment. But this is a Monday, Tuesday, Wednesday parabolic trade. A Monday, Tuesday, Wednesday parabolic trade, and I want to talk about range expansions. When I have a range expansion opportunity, I take my tool and I project 100% expansion of the range. That's it for a potential profit target. We will look at both of these specific setups. Now, for traders that have asked me, can I go over this? I've done this in several videos. All this is my fib tool. I have just reconfigured it with 0, 50%, 100, 200, 300, 400, 500% expansions of the range. Classical charting, this is not Fibonacci, codes and all these things. Classical charting principles, 100% expansion of the range is a potential profit target out of a 3-day rectangle coil. And on day 3, I'm looking for a parabolic target as a range expansion opportunity. This is asymmetrical risk reward. First hour closes at this pin hammer at the level. So the currencies sometimes will move prior to the New York Open. That is different to me than oil, gold. Oil will often move at 9 a.m. Indexes, 9:30 a.m. Sometimes we'll see a move first hour and 9:30 will continue it on the currencies. This is the first hour at the high of day and closing price level. The dump and pump template, I went over this last week. Euro Canadian, we saw it on the NASDAQ a few weeks earlier. This is a day 3 template, dump and pump on a day 3. Now let's take a look at Tuesday's London day 3 shorting opportunity. High of week, Tuesday is a day 3 from a Friday, Monday, Tuesday template. We're at the high of the week when the London session begins. They dump it down just prior to the session and then pump it up as London is opening, that 4 a.m. hour, 3 a.m. to 4 a.m. hour. In the middle of the London equity market opens. Engulfment pin hammer at the high of day, double zeros on a day 3 setup, Friday, Monday, Tuesday, for a 50 pips back down through the low of the day. Again, just an example of where you can have 3-day templates within the Monday to Friday template, Friday, Monday, Tuesday. Day 1, day 2, day 3 high of the week. We have volume up high, upper level, above closing price. They traded into the previous day's high of week level. Engulfment pin hammer for the collapse back down of 50 pips. An example of a day 3 trade on Tuesday. On Free Cash Wednesday, we have a dump and pump template. We'll just back this up a bit to show traders. The market dumped down in the London session and broke the previous day's high before beginning the reversal, front side, back side. We made a higher high just before the session begins. No major red news. We had Powell again speaking at 9:15 a.m. and then the New York Open for the continuation parabolic trade on day 3, an easy 50 plus pips. The parabolic trend trade, a dump and pump template at the previous high of day level. Now, this universal EMA game, we talked about this. Trend trades are going to coil inside of the EMA. Reversal trades will not be at the EMA. They'll break down and coil inside of the EMA for the reversal. But on a day 3, this aligns with other time frame traders driving that move. Day 1, day 2, day 3. Hourly templates. A measured move, range expansion on day 3. We'll just back this up. We'll show this again. If we take the high of day, low of day levels and project them, a 100% expansion of the range as a potential profit target on day 3. A day 3 parabolic trend trade on the euro yen. Gold was an excellent opportunity both Tuesday and Wednesday, and I want to talk about this for a moment. Just if we go back to last week, we have Friday's closing range. Monday was an inside day. Tuesday pumped up to the high of the week, the closing price of the week. Day 1, day 2 for a day 3 trade on a Tuesday, which began our day count. And we, day 3 midpoint range of the week, coiled back inside on our Thursday. We talked about this in the video on the weekend, and that started day 1, day 2, day 3 parabolic trade on Friday, which gave a range expansion on non-farm payrolls on day 3, Free Cash Friday. But one of the important things I want to talk about with that is that several traders on Monday, I mentioned that Monday was a day 2 on gold. And that's, again, there can be an overlapping opportunities. Understand this. There's overlapping opportunities. Monday's day 1 in a new Monday to Friday template, but it's also day 2 now in a Friday Monday template. Why, Stacey? Because it broke the low of Friday. Friday's breakout failed. We're underneath the closing price. And when we come to the New York session, we're also underneath of the first green day closing price at the New York Open. We have lower lows on a day 2. We're underneath closing price level when at the New York Open. First hour pins the high. Hourly rotation. New York Opens, pin hammer. This is a day 2 opportunity. And some traders were arguing back and forth about it's day 1, day 2, which means Tuesday potentially was a day 3 trade. Now, when I came to the U.S. session, day 3 had already done 1 full range expansion as we came into that session. Now, we went over this trade in the community post. First hour pumped up 75 pips and gave a New York Open reversal trade for 50 pips. 50 pips straight back down. We'll look at that in one moment. But that means that heading into our Wednesday, when we come to our New York window, we're underneath closing price. We're underneath closing price. Do we have any first green day? No, we do not. Do we have any trap volume outside of the daily low? No, we do not. But we have day 2 shorts in the market, which means we could still be going down. Day 2 shorts. Day 3 now, we're inside. What does this look like on a day 3? If this is going to, but we're in here, pump, breaks down, pumps into closing price, breaks lower, pumps up, first hour pins up into our broken down market. Powell speaks at 9:15. We're looking for a New York opportunity. Now we're looking at a 1 hour chart. Our universal EMA is still coiled inside. This was a no-brainer opportunity for a continuation of a second full range expansion on Wednesday, Free Cash Wednesday. We're already in a parabolic breakout from our day 3 Tuesday. So this range expansion, which essentially is our day 1 opening range, and we're now in a range expansion, day 3 breakout traders in the market. This was easy free cash for traders on gold today. This was Tuesday's gold trade. Again, first hour came back up 75 pips. Several traders participated in the triple bottom reversal. First hour, we had a low of the day put in place right at the end of our London gap time window. They traded back into it before we had our double railroad track, pin hammer, reversal engulfment. 30 minutes into the session, that completed our reverse head and shoulders. And then the 8:30 a.m. continuation up almost 75 pips from there. Second hour open and coil sideways. And as I mentioned to some traders, I just drew the 50 pip box. The space, we had 50 pip box. We had a break in structure. Doesn't need to be complicated. You don't need to be labeling anything. Wait for the time. You can sit there and stare at every little bar, or you can wait for 9:30. It's your choice. It's really simple. We had a break in structure, a lower low on the inside, and we had 3 pushes into the high. And at 9:32, we had our engulfments on that right shoulder for an easy 50 pips back down. So reinforcing timings, levels, behavior, pricing. Guess when this market reversed for 25 pips? Beginning of the new hour. Coil sideways. Little micro W, reversal, engulfment, pin hammer, new hour starts, boom, free cash. Timings. You can label all this crap till the cows come home and try to trade the bars, or you can watch the clock, wait for the timings, understand where the opportunity is. There was, we talk about this, 30 to 45 minutes locking in a high or a low. First hour, 30 minutes locks in the low, triple bottom reversal. Breaks out, pulls back, dump and pump template, higher high on the inside. 3 levels of rise, coil sideways, 9:30 New York Open, 50 pip reversal. Third hour opens, 25 plus pip reversal into shorts from the New York Open. We're on Wednesday on gold, free cash Wednesday. So pump and dump on day 3 and measured move opportunity on free cash Wednesday. Day 3 breakout traders in the market. So just to repeat, I'm not looking to try and counter trend these markets. There's no reason why this market couldn't this is an all-in day, all-in fade to the close of the session. Understand where the easy money is made. Find a day 3 trading opportunity. Pump and dump, dump and pump. Trend trade or reversal trade. I am looking for a day 3, an instrument that has a day 3 setup, whether that's in Asia, whether that's in London, or free cash Friday, third session on day 3, closing range of the week. Free cash, parabolic trades will grow your trading account fast. First red day, first green day, inside days, 3 days of breakout traders in the markets. Understand that all this other stuff on the inside, you can read price action till the cows come home. What are the levels? What is the template? How is price behaving when it gets there? Do we have an opportunity for a range expansion of a larger range, or are we in a smaller range on the day within a larger template? Parabolic trades will grow your trading account. Where is the easy money made? Keep it simple. Rinse and repeat. Day 1, day 2, day 3. Master your emotions. Master the setups. Get away from all the zigzag, crappy, fugazi, blah, blah, blah. Learn where the larger template money is made. Keep it simple, traders, and may the markets go with you.